Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. There's just an hour to go until the closing bell, and stocks moving higher amid signs of progress in trade talks, setting up for more all-time highs here and ending one of the most volatile first halves of the year in recent memory. Let's welcome in now Sylvia Jablonski. She's CEO and Chief Investment Officer at the Finance ETFs, Yahoo Finance's Washington correspondent Ben Worschel, and senior reporter Allie Canal, who are all joining us throughout the show to break down the headlines. Allie, get us started on where the markets are right now, with sights set on another record close, Allie.
That's right, Josh. I'm also on record watch today after we saw those records for the S&P 500 and NASDAQ Composite on Friday. And right now, we are green across the board here. The Dow Jones Industrial Average leading the way higher there, up about 0.4%, or just under 200 points. NASDAQ Composite and the S&P 500 are both trading about 0.3% higher here. But you were just talking about a volatile first half of the year. And look at this year-to-date chart. I mean, we climbed back over 20% off of the lows that we saw in April following President Trump's Liberation Day tariff announcements. We also saw some choppiness in the beginning of the year after that DeepSeek news. And now we are here at stocks at record highs. And the volatility hasn't just been in the major indices. We've also seen volatility in bond yields. Right now, we see the 10-year note trading down about 5 basis points, hovering at 4.2%. Same with the 30-year bond, down today, just below 4.8%. But you can see this spike that we saw right around mid-May. Now, this came as there was a lot of deficit concerns in Washington, D.C. We have since moved off those highs here, but there have been concerns among strategists that we could see a return of the bond vigilantes and potentially get a substantial move higher. So that would be something to watch heading into the second half of the year. Another move that we've seen is Bitcoin. Bitcoin has done very well so far this year, up about 14%, trading just around 107,000 bucks a coin. We know that the Trump administration has been very pro-crypto. We saw the Genius Act pass for stable coins, and despite some earlier volatility throughout the spring, we are now hovering at those elevated levels. And then crude oil, we saw that pop about a week ago at this point. It's crazy. So much has happened since then over the Middle East tensions, but now we are starkly off of those highs here. So just a lot that we continue to track, but stocks at record highs. We have individual companies at all-time highs as well. So we'll be continuing to monitor this throughout the trading day and maybe see if we can have some more records at the end of the trading session, at the end of the close.
So, Sylvia, I want to bring you here as well, because as Allie was pointing out here, listen, popular averages, green everywhere, green across the screen. Walk us through, what do you make of this market, Sylvia, and do you see the momentum continuing here?
Well, what I make of this market is that it seems as though investors have essentially changed their minds about the negative sentiment that we saw when the market pulled back 20%. So it feels like, everything is a go here. Geopolitical tension, it felt like a 12-day war. And I think that there's a lot of positive, feelings in terms of what the outcome of that will be. There's a lot of positive expectations around what will happen with tariffs. GDP is set to be 2 to 2.5%. You have $7 trillion of cash sitting on the sidelines. Jobs numbers are good. The macro data is good. I think overall we're kind of poised to gain some momentum here, even though it's coming into the dead of summer.
All right, so investors betting on some positive expectations, including perhaps what's going on in our nation's capital, because the Senate is making a final push to advance President Trump's signature legislation with a flurry of last-minute changes. Ben, what is the latest on the bill?
Yeah, Josh. So we got a lot of hours to go before the Senate finishes, but they're in what's called the vote-a-rama process. And the focus for this last phase appears to be around the healthcare piece of this. This is one piece of this 900-plus page bill. Two amendments we're watching in the next couple hours. One is about essentially making Medicaid cuts deeper, and the other is about a new fund, adding to a fund to offset some of the existing cuts. And that sort of is, in a nutshell, is the dynamic that Senator Majority Leader John Thune is dealing with here, is that basically he has a caucus that is pulling in both directions on these healthcare cuts that are projected to put over 11 million people without health insurance if this bill passes as is. The bottom line here, though, politically, is that 2 Republicans have said they're going to vote no on this bill. They seem to be lost. It's Rand Paul of Kentucky and Tom Tillis of North Carolina. Republicans can lose 2 more before this bill is sunk. So that's what the focus is going to be in the hours ahead. We're expecting a vote either late tonight or early tomorrow as this amendment process plays out. And the House is already making preparations to begin consideration. tomorrow. There's reports of a House Rules Committee. That's the first step that could happen as early as noon tomorrow with the full votes in the House to get this to the president's desk by the end of the week, happening likely on Wednesday.
Ben, I got to ask you, while I have you, my friend, about these comments from Elon Musk. Something got a lot of attention on X about the bill. He doesn't sound happy, Ben.
Yeah,
does not like this. Says utterly insane. Says the latest Senate draft bill is going to destroy millions of jobs in America. It's going to cause immense strategic harm to our country. Obviously, we're going to talk about this. It's Musk, right? I guess my question, Ben, is how much does it matter? How much effect, how much influence, how much impact do you think Musk has on Capitol Hill?
Yeah, I think his impact on Capitol Hill has definitely faded in the last few months because of his falling out with President Trump. Although he does encapsulate, I think, two of the major objections to this bill that you see amongst Republicans. The first is this price tag question. We had a new projection over the weekend of a $3.3 trillion price tag at the minimum of this. It goes out above 4 if you add in other factors that Musk has re-upped his criticisms of. And the other is this series of changes over green energy, which obviously impacts Musk's bottom line directly, but is a real sort of change for how I think the legacy of this could be felt on the energy sector. Not only is our green energy credits going to go away, so in other words, goodies from the government going to disappear, there's new provisions that we just learned about this past weekend where solar energy companies could pay an additional tax based on the provisions of this bill, starting in 2027, if they source some of their projects from China. So it does. I wouldn't overplay how much Musk is being listened to in Washington these days. His sort of fight with Trump has sort of put him on the sidelines, at least on the Capitol Hill. But I do think he gets at the two major criticisms of this bill that are going to be talked about, not just this week, but for months ahead if it passes.
Ben, do you think, listen, a lot of puts and takes, a lot of big personalities. Do you think we're going to make Trump's July 4th deadline on this?
I think the House is going to be. I think we are the gamesmanship we're seeing on the Senate today. I think we have a pretty clear sense of how that ends. It's changing quickly, but is that a lot of these healthcare provisions the amendments do not pass, and the fiscal hawks who are objecting to it vote yes anyway. So it does proceed. So there's a lot of confidence that stage is there. The key thing will be Wednesday, Thursday, as we get into the House, who has said that they're not. The fiscal conservatives there have said they don't want to vote for a bigger bill than they passed already. This bill is about $900 billion bigger. So they're going to have a big decision to make. The pattern we've seen is that fiscal conservatives make a lot of noise, but then end up getting a few concessions and voting yes anyway. So I think what we've seen from the White House today is again and again confidence that this is going to happen. Whether they really make the July 4th remains to be seen for certain.
So, Sylvia, I want to get your take on this as well, what Ben was talking about here. The big, beautiful bill, Sylvia, it gets passed. That means what for the market?
Well, I think that it depends. It depends on, what actually gets passed and what happens here. So for broad-based equities and technology and things like this, I think that there's this belief that tax cuts will be helpful to that sector, and you might see a spike there. Energy, industrials, and things like this might benefit. But yeah, you do have to worry about the solar types of companies, the green energy that might have a more restrictive type of relationship with this bill once it's passed. And what it comes down to is, how is it going to be paid for, and what is the balance between the tax relief that drives corporate America versus the ongoing debt burden that we're all worried about, Fed Chair Powell, how rates are impacted by all of this and things like this. But I think overall, headline, once it passes, the broad-based equity market will probably like it.
All right, thank you, Allie and Ben, appreciate it. Now for more on the latest market moves, as stocks edge closer to another record, let's welcome in here Marta Norton, Empower Chief Investment Strategist. Marta, it is great to see you as always. So the market record highs, we keep grinding higher, Marta. Bulls come on the show, Marta. If I was to summarize their take, I guess it'd be something like, you know what, we're going to keep grinding higher because earnings are solid and Trump has seemed to back off that maximalist terror threat. The bond market seems relatively calm. What's not to like? You agree with that, Marta?
I certainly can resonate with the idea that earnings have been strong. I think what we saw through Q1 earnings season was just a measure of resilience that folks had been worried about. So certainly that's one positive. And yes, we do see that Trump has played his hand in terms of the most extreme tariffs, and now we're in deal-making mode. But I guess what I would point to, if we want to have some sort of moderation in our expectations is just where valuations are within the equity market. This is such a tired song, and I know it comes up over and over again, but when you're taking a look at valuations, it's not just that they're above average, it's that across most of the US equity market, they're at the most extremes. That's the 9th, the 10th decile for a lot of these sectors. And I think that means that even a margin of disappointment or kind of an inability to deliver on the grandest of ambitions could mean that it's more of a muddle through environment for the second half of 2025.
What about Q2 earnings, Marta? I'm just curious about your expectations there. Could that be another positive catalyst for the market?
I think what when we're thinking about Q2 earnings, there's a few things that we want to take a look at. First, we're looking at CapEx. CapEx has been one of those things that has been actually, at least when we're looking at the AI front, a turbocharging area. And that shows no sign of abating. So I think that's one of the interesting areas when we're looking at what to expect in the second half of 2025. Does that continue? Does that continue to show enthusiasm for future prospects? But I think there is this consideration for the trade deals that do manifest themselves, that we will still see a seismic shift in trade policy. And so that could mean that potentially earnings aren't quite as strong as we start to see a little bit of the impact of those flow through to corporate bottom lines. I think the idea here, though, is that we're still starting from a very strong starting point. Earnings have been very strong. So even if we see a little bit of disappointment, they're not necessarily collapsing completely.
Sylvia, Marta brings up the great mega AI trade and trend, and certainly seems like investors as excited as ever about the AI boom. Are you, Sylvia, still as excited about that?
I am just as excited about it, and I do think that this is the news to watch for this next earnings season. So last earnings season, we were worried about the future, right? What would trade tariffs do? How would they impact bottom lines? How would corporations respond? And we saw that actually it was just fine. And most companies beat on both top and bottom lines. It was a good earnings season. And so here we are going to Q2. There isn't much more clarity around tariffs other than, as Marta said, it looks like there is some sort of art to a deal here, which we'll get some clarity on. But I think that overall earnings growth, we're expecting 5%. I think we should beat that. And I think as we see that CapEx expand and we start to hear news about companies generating revenue because of AI and having it improve their costs and continuing to optimize their operations, that's just another impetus for the market to rally. I do think that Marta also brought up a great point, though, that the bar is set really high, and any kind of slip could, send us south pretty quickly. So.
Marta, we're also talking, of course, about the big, beautiful bill. The Senate's debating it. I'm curious, if that becomes law, what you think that means for the markets. I know there are, with that bill, Marta, concerns about debts and deficits. At the same time, I'm looking at the 10-year at 4.23. I'm just curious what you make of that.
Okay, yeah, I think this is a really important point. So when we're looking at the big, beautiful bill, it's very hard not to look back to 2017. And when you saw, the first introduction of these types of tax cuts, of course, the market rallied really meaningfully. And so the question that we're facing today is, can we see the same enthusiasm? But I think, as a lot of people have fairly pointed out, the one big, beautiful bill is more of an extension than it is an expansion. Certainly, there are these new dynamics to it. But when we think back to 2017 and we think about a corporate tax rate falling from effective 35% to effective 21%, and we're looking at not the same level of seismic change, I think this could be something that the market responds to enthusiastically in the near term, but it's hard for me to think that this is going to mean an extension of massive equity gains. And then to your point, there are those deficit and debt concerns that are hanging over the bond market, particularly the rise or the reintroduction of the term premium. And I think we're looking at kind of a different point in our psyche when it comes to evaluating the debt, the deficit, and what that can mean for the fixed income market. So no great understanding exactly of how bond investors are going to respond to this, but I think it's something that is going to remain front of mind for folks as we look at what the bond market can do going forward.
Marta, one last theme I want to get your take on before I let you go. Dollar weakness. It's been a big, important trend and theme. It's down about 10% this year. I'm curious what you make of that, Marta, and do you see that continuing?
I think the big question that investors face when they're looking at the US dollar is this decline cyclical or is it structural? In other words, are we looking at just yet another underperformance cycle that we do see with the dollar, even though it remains the dominant currency? Or are we looking at something that is shaking those underpinnings that make it so dominant? And our estimation is that we're still looking at a very overvalued dollar that sets it up for more of a cyclical decline, but we are seeing this shift on the margin again, a shift toward protectionism, a maybe a little bit less stable backdrop when it comes to institutions, and that does potentially erode a touch of confidence in the dollar.
Marta, great to see you as always. Thanks for joining the show.
Thank you.
We are just getting started here on Market Domination. Coming up, Robinhood stock soaring to new highs today. That says it's making a big statement to the financial services community. Robinhood Chairman and CEO Vlad Tenev joins the program later in the hour. Plus at 3:30, it's the latest edition of our series, Goodbye or Goodbye. We're taking a deeper dive into two stocks to help you make the best moves for your portfolio. Stick around, much more Market Domination. So go. Now time for some of today's trending tickers. Still with me, Sylvia Jablonski. We're tracking Oracle, Joby, Aviation, and Disney. Let's start with Oracle, though, announcing a cloud deal worth $30 billion annually, larger than the entirety of the company's current cloud business. Revenue from the deal with the unnamed customer will begin in 2028 and ranks as one of the largest cloud contracts in history. Stifel upgrading that software company stock to a buy, raising its price target to $250 over the sustainability of cloud services. So this one was interesting, Sylvia. Basically, Oracle released an 8K, and that's where they announced, okay, we signed these multiple large cloud agreements, including this big one, which made headlines. Evercore's Kirk Materne, a smart guy, here's what he told his clients. He says, we believe this goes to demonstrate the company's cloud traction supports are in the company's view that OCI growth, so Oracle Cloud Infrastructure, will accelerate through the next fiscal year and reach 70% plus growth. It's also one of those names, Sylvia, the street, I mean, you use 65% of analysts say this one's still a buy here.
Yeah, absolutely. So I actually love this stock, and it's funny because I think that Oracle and alongside IBM are kind of like the old guards with new tricks.
Yeah.
Oracle, I think, has made itself a cool company again. We kind of forgot about Oracle for a long time, right? I think the last time we talked
Larry
about
Ellison would love that description, by the way. Yeah, you should definitely, if you meet Larry, tell him that.
Right, yeah, for sure I will, and then I'll run the other way. No, just kidding. But no, I really think that they're doing great things, and I think what they've done is that they've kind of rejiggered their business to participate in the growth of AI and the next generation of technology here. And what else is interesting about Oracle is actually they're becoming quantum ready, right? So quantum computing is the next big thing, right? And we're expecting this multi-trillion-dollar marketplace. And what Oracle has done is that they've created their cloud in a way that makes it QAS, which is quantum as a service potential, so that that is also something that they can participate in. So I love this stock now. Cloud, AI, machine learning, and quantum computing for their future. I think it's going to be a Wall Street pick for the next couple of years.
Big move in the stock and a lot of fans still on the street for sure. All right, another stock we want to mention on the radar, that would be Joby Aviation, which is surging after announcing a milestone in its air taxi service in Dubai. The urban air transportation company completed piloted electric vertical takeoff and landing, which includes full transition flights, a complex technical operation for sure. Stock's on the move. So basically, the company completes its first air taxi flights in Dubai, Sylvia, intended to carry its first passengers next year. And apparently they've got this 2024 agreement with Dubai's Roads and Transport Authority, which allows the company to operate air taxis in Dubai for 6 years. CEO saying the UAE is a launch pad for a global revolution in how we move.
Right, and I think that, again, we're talking about this next generation of AI, right? And this is what AI actually allows for, things like this to happen. And this company is actually super interesting. So I think they also are talking about a potential billion-dollar deal in Saudi Arabia where they have 200 different crafts that are going to potentially be deployed there, too. So it's this growth of this new way of transportation, the next-gen transportation. The other thing about this stock, though, is that it is so wildly popular on social media. Like, if you look at Reddit rooms and different, X channels and things like this, the retail people out there that are, the ex-meme stalkers, this is one of their top names, and it's just getting so much attention right now.
Would you like to be one of the first passengers next year?
I would consider it.
Really? All right. You and me both.
I would consider it.
All right, Disney, finally, let's look at this one. Receiving an upgrade from Jefferies, raising Disney's rating to a buy with a revised price target of $144. Analyst James Heaney citing a limited risk of park slowdown for the second half of the year, new content, further direct-to-consumer expansion, positive upside for the cruise business. The bullishness comes as the entertainment giant faces headwinds, including upheaval in the media industry and discussions about a successor, of course. to CEO Bob Iger. So Jefferies does take this one a buy, Sylvia. Limited risk of a slowdown, saying we believe Iger and company have finally righted the ship, increased confidence in the growth trajectory, expects an earnings breakout, target 144.
Yeah, I agree with this. I think that Disney's been suffering for a little while, right? They have this internal turmoil around the succession plan and politics and things like this. And I think it's been a long time since they really came out with something that the media and investors really wanted to hear. But I do think that, you can't count out the house of the mouse. They have these diversified revenue streams. They are expanding Disneyland in Abu Dhabi. They're going to have this incredible expansion, I think, globally in terms of the theme park business. They have the Fubo deal. Some of they have to kind of like fix their animated movie part of the business. That last launch just wasn't successful at all. I think it was their worst showing ever. But multiple revenue streams, fixing up the house in terms of the future. It's a company that has always kind of been that classic safe balance sheet of all-American stock, pays a nice dividend. And I think investors will reward it once they turn their story around.
Yeah, don't count the house of mouse or Mr. Iger.
That's right.
Yeah. Well, from a $17 IPO to a market cap of roughly $1 trillion now, Tesla's 15-year public journey has been filled with industry disruption and surprises. The Elon Musk-led company listed on the NASDAQ on June 29th, 2010. That stock is up around 300-fold since then. Yahoo Finance senior reporter Allie Canal joins us with more on this milestone. Allie.
Hey there, Josh. Yeah, when Tesla made its 2010 public debut, it was considered a moonshot. The company had just one car on the market, the original Roadster, and plenty of skeptics. But Tesla quickly shifted into high gear, first with the Model S, then with the debut of the more affordable Model 3, which marked a big turning point in consumer adoption. Tesla wasn't just a niche luxury brand anymore. It became a mass-market EV powerhouse. Behind the scenes, CEO Elon Musk bet big, building out gigafactories around the world to scale battery production, pioneering autopilot, Tesla's semi-autonomous driving system, years before its rivals. And the company also flipped the script on how cars are sold. No dealerships, just direct-to-consumer online sales. That created a lot of hype, and it's become one of the most recognized brands on the planet. At one point, the company even became the most valuable automaker in the world, briefly joining the $1 trillion club in 2021. But it hasn't all been smooth sailing or driving in this case. Production delays, price cuts, and rising EV competition, especially from Chinese rival BYD, have raised new questions about sales growth and margin pressure. More recently, Elon Musk has faced criticism over his erratic behavior, unpredictable relationship with the president, and distractions caused by juggling his former government role as head of Doge alongside his other ventures, including the social media platform X. So, what is next for Tesla? Well, investors are now watching for growth in Tesla's AI and robotics bets, like its Dojo supercomputer, self-driving software, and even the Optimus humanoid robot, which Musk says could become more valuable than the car business itself. And according to analysts tracked by Bloomberg, many on Wall Street remain bullish. The company has 30 buy ratings, 17 holds, and 14 sells, showing there's still plenty of faith in Tesla's future, even amid all the challenges ahead.
Thank you, Allie. So, Sylvia, what interests me about this name is that Musk is Tesla and Tesla is Musk. And there's a lot of folks who are in Tesla who may be watching this right now. And the reason they're in that name, Sylvia, is because they believe in Musk and they believe in his vision and they believe, you know what? Yes, I believe the future it's robo-taxis and robots. And I think Musk is going to nail it. And that is the future, and Tesla is going to dominate it.
Yeah, and I think that that's true, and I think a lot of us agree with that. So Tesla, to me, has never really been a car company. It has been about their AI, and it has been about their future in that space. So robo-taxis could be, who knows, a multi-trillion-dollar industry. We were talking about Joby Aviation. Imagine if they actually get that to work, right? I think that that's going to be a massive way that we change the way that we transport ourselves, right? And not only that, but he has solar, he has Dojo, he has supercomputing, he has AI. And you're right, he is Elon Musk. I think the way he, the minute he stepped away from DC, you did see the stock rally a little bit. So I think that everyone's kind of happy that he's concentrating on his own business again. And that'll give investors a lot of confidence in what he's doing. But I think the future of Tesla is very much robotaxis, AI, potentially robots, and not so much cars. But cars will be fine too. I do think cars will be fine too. Eventually we get these tariff deals. He is still a leader in that space. Best battery, best AI.
Revamped Y, the new more affordable model, right? All right, and Q2 deliveries on deck. We'll see. Well, coming up, it's the latest edition of our series, Goodbye or Goodbye. We're taking a deeper dive into 2 stocks to help you make the best moves for your portfolio. Stick around, much more market domination still to come. Welcome to Goodbye or Goodbye. Our goal here to help cut through that noise, to navigate the best moves for your portfolio. I'm here now with Sylvia Jablonski, Defiance ETF's CEO and Chief Investment Officer. The firm manages roughly $5 billion in assets. Sylvia, let's start with some names. We're going to start with what you like. And this name already has had quite the run. Oklo, it's up 160% already this year. You like this one still, Sylvia. You say stick with it. So let's run through some of the reasons here. Bullet point number 1, fast rising stock for sure.
Yeah, you just said it. I mean, if you look at the chart on this stock, it's just been absolutely, rocket ship this year. And I think the reason why is, we've been talking about this on the show today. There's so much growth in AI and the build out of AI infrastructure. In order to power that, you need some sort of resource. And Oklo has really been the company that has stepped into the fore of being able to provide that power and energy for the future build out of AI.
All right, let's go to the second bullet point. Number 2 would be Sam Altman-backed startup, big name.
Yeah, so I think that that's just gives it that credibility factor, right? I think that some of the biggest names in technology are actually super bullish on this particular company and support it and plan to partner with it in the future for some of their AI needs, and I think that that's helpful.
I went to talk to a venture investor, Sylvia, and he was early in OpenAI, Sam Altman's company, and he said to me, you know how in real estate it's all about location, location, location? In venture investing, he says it's just founder, founder, founder. That's what he said. Absolutely,
founder, 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 and then backing by top founders.
All right, third point, clean energy, 24/7 power capabilities.
Yeah, so there's an efficiency aspect to this, right? We talk about different types of green energy. We want to be carbon neutral by 2050, all of these things, but none of the resources that we actually have could power 24/7. So hydrogen can't do it, solar can't do it, wind power can't do it. What we have now, classical, energy solutions just don't do it, and Oklo can actually provide enough nuclear energy to power 24/7. So I think that once that actually gets put into play, you're talking about a big horizon here for this company to grow.
All right, so you made a compelling case, Sylvia. Before viewers jump all in, though, let's talk about what you see as downside risk to this one.
Right, and the biggest argument that we hear about a lot of these startup types of companies, whether they're AI names, quantum names, next generation, energy names like Oklo is, where's the money, right? We want to see them generate some revenues, but I think that they are on the precipice of doing that within the next year or two. So that's a really good story to come.
All right, so buy Oklo. Let's talk about one you would avoid, all right? That would be SunPower, all right? Avoid this one. Let's go through the reasons why. First reason, thin liquidity.
Yeah, this is a name that had some popularity a few years back, and they did have a positive, Q1 2025, but for the years prior, it just hasn't been doing that well. There hasn't been that much investor interest anymore. I just think that it's a name that is losing its luster.
Second point, reason, does not have pizzazz of nuclear, for sure.
Right, and we just talked about it, right? So nuclear can power 24/7. It's actually an efficient way to help AI grow and build out, and even talking about like crypto mining and all of these things, it's not something that solar energy can do. It's mostly stuck in the residential segment, and that's a problem because it's not really growing right now.
Third and final reason you say avoid this name, subsidy pullbacks.
Yeah, we talked about that big, beautiful bill, and solar is just not one of the recipients of sugar in that bill. And I think that if you don't get any kind of subsidy here, and on top of that, you might have a tax that solar companies have to pay, I don't think that bodes well for this.
Meanwhile, that bill stays friendly to nuclear, by the way.
Yes.
All right, this one, finally, though, what would be the upside risk to that call? Clean energy bill that extends solar credits. That would
exactly. If we come to the decision that in order to actually get to carbon neutral, you could have this mix of nuclear, wind, hydrogen, and solar. Maybe solar gets a tailwind from something.
All right, bottom line, buy Oklo, avoid SunPower, according to Sylvia. Thank you, Sylvia, so much.
Thank you.
And thank you all for watching. Goodbye or goodbye. We're talking about tokenized stocks and why investors are paying attention. Tokenized stock is a digital representation of a real-world equity, like Nvidia or Tesla, that financial services companies like Robinhood are creating using blockchain technology. It's a cryptocurrency token mirroring stock prices, but unlike typical equities, investors can trade them 24 hours a day. Although you may own a token that's backed one for one by actual shares held by a custodian, tokens do not come with voting rights or dividends, and they're often tied to centralized platforms. Those conditions raise questions about regulation and risk, especially after the collapse of crypto exchanges like FTX. Still, tokenized stocks signal a future where crypto continues proliferating into the mainstream, offering more options to a new generation of investors. Let's take a deeper dive into tokenized stocks and get to Yahoo Finance's Brian Sozzi, who's speaking with Robinhood CEO Vlad Tenev. Brian.
All right, thanks so much, Josh. Vlad, good to see you here from France and your big product unveil. Almost didn't recognize you there on camera. The sun has set over there in France. Good to see you as always. So you heard Josh in the lead up here, Vlad, discussing the importance of tokenized trading. Now, your stock is ripping higher here on this news. Why do you think this is so important, and why did you have to get a first mover advantage getting this on the ground?
Thank you for having me. And by the way, I should correct one thing that Josh said. Customers do get access to the dividends from these. So I know that that's an important thing for dividend investors in the EU. So you will have exposure to that. But I think there's many interesting things about this. One is that we see a world when crypto and traditional financial services fully merge. And we'd like to demonstrate with real products in customers' hands how that world could be better, more useful, with global availability, 24/7 access to the markets, everything that blockchain has to offer. And really in the EU, what we're building is the seeds of what Robinhood looks like if it was built from the ground up on blockchain technology. So you have stock tokens, you have access to private company shares, you have perpetual futures, spot crypto. So really it's becoming a comprehensive crypto system, a comprehensive financial services platform for European customers built from the ground up on crypto technology. I think that's very exciting.
Vlad, before this news, how big was your EU business? And this news today, as you look forward, how big do you think your EU business can get over the next 12 months?
Yeah, well, we had announced that the EU business has been live for a little bit over a year, and together with the UK, crossed north of 100,000 customers a few quarters ago. But that being said, we were only really live in 4 countries in the EU, and you add the UK, that becomes 5. Now we're live in 31 countries, fully live under MiCA and MiFID, which are EU regulations. So, and that was only Robinhood Crypto. We're now changing the name of the product. It's going to be Robinhood, and it's live in more countries. And there's also a significant increase in the capabilities of what Robinhood does and offers.
I think a large part of the move in the stock, Vlad, it reflects what you're working with on layer 2 blockchain. Now, you said this is in development. Take us through this development, and how does this change what you do at Robinhood?
So the goal here is, I think, for the crypto industry, it's time to move beyond Bitcoin and meme coins and deliver fundamental utility. And for us, what that means is real world assets. We want to be the best platform to buy and sell and trade real world assets. And I don't think there's a blockchain that's been built from the ground up for that. So I think that can be our niche. And for something so intricate where the security and the regulatory requirements are so high, we thought that a new blockchain was needed where we could build and design these things from the ground up. So right now, stock tokens are live on Arbitrum. We've been working very closely with that team to build them. But the Robinhood chain is coming, and the team's been hard at work. And I think there'll be some things that you see there that that'll be really nice. So can't wait to share that with you guys.
How do you see tokenized trading evolving from here, Vlad? I think about BlackRock and Larry Fink has been very bullish on tokenized trading. They've dabbled in this arena as well. I think Franklin Templeton has dabbled in this as well. How does this change the dynamic for the retail investor?
Yeah, I mean, I think it will evolve in 3 phases. I outlined them in my talk earlier today on a nice chalkboard. So you guys should see that if you haven't.
It's gone
already.
viral, Vlad. I mean, that whole presentation has gone viral. So yeah.
Yeah, you don't see chalkboards in digital cryptocurrency presentations, but I think it was very informative. So phase 1, which we're in right now, every token is actually accompanied by a real share where we go to a regulated TradFi broker, which goes to a market. Stage 2, we intend to integrate stock tokens into Bitstamp, and that will unlock 24/7 trading. And we believe we can get that done within the next few months. Stage 3, also within the next few months, you get the full power of DeFi. So you'll be able to, once this happens, actually use all of the DeFi features and have these tokens living in your non-custodial wallet so that you could self-custody them. And of course, as with all crypto technology, it's global by default, decentralized, permissionless. And we think that as we continue to work with our regulatory partners and counterparties, we'd like to make these available to anyone with an internet connection worldwide, of course, subject to local rules and regulations. But once the power of this technology to tokenize not just public shares, but private shares and make them tradable 24/7 with instant settlement is demonstrated to the world, I think everyone's going to want to have access to this.
Vlad, I want to make sure I heard you correct. You think we will have 24/7 trading on Robinhood in a few months?
That's the goal. I mean, for our EU customers, at least, that's the goal. And you already have it with crypto assets. So these stock tokens powered by crypto technology will use the same underlying infrastructure. So once they're available on Bitstamp, that we believe will unlock 24/7 trading. So you'll get the Saturdays and the holidays, and I think that would be very compelling.
What do you think it will be? What do you think it will take for U.S. regulators to get on board with this? I mean, this would be a big disruption to decades of how investing has been done.
Yeah, and I've talked about the need for 24/7 markets in the U.S. for quite some time. It would be a shame for the EU to get there first, but I think the U.S. is keen. You know, the U.S. wants to catch up. We've been having a lot of conversations with the regulators. The SEC roundtable on tokenization had our crypto GM Johan actually as a participant. And I think there's interest, there's openness and excitement from the crypto task force there. And we don't believe there needs to be additional legislation. We think actually the SEC has the ability to make this happen. So we're going to continue to collaborate with them to bring it to the U.S.
But are U.S. regulators willing, Vlad, to let the EU get this new technology first, 24/7 trading? Are they willing to take a back seat to the EU?
Well, I don't think that we should be happy with the Europeans having nice things before us. The analogy that I often give is it's sort of like high-speed rail, right? The Asian countries have faster trains than us. Of course, the U.S. has fast enough trains, but I do think that it's not going to be the case for very long that, you know, the Europeans will have better access to markets. I think that there will be a lot of interest in bringing this worldwide to the U.S. and everywhere else.
Lastly, Vlad, of course, this news coming at a very interesting time for markets. Some people call it FOMO, fear of missing out. Others call it a euphoric move. Others call it a melt-up. How do you explain what we're seeing in markets and what's some of the activity you've seen on the platform in the past few weeks?
Yeah, I think what you're seeing is sort of the juxtaposition of two realities. One is that there's a lot of like geopolitical and economic tension, and that tends to be negative. But on the flip side, these frontier technologies, including cryptocurrency and artificial intelligence, are pushing ahead and accelerating tremendously. And that's a counterbalancing force. And I think what retail certainly believes is that the progress and the benefits by these frontier technologies will outweigh sort of like the near-term risks that sort of these macroeconomic and geopolitical headwinds are introducing. I think that the impact on society long-term from AI and cryptocurrency, there's optimism about that, and I think that's what you're seeing reflected in the markets.
Well, I know a lot of work goes into this type of technology and breakthrough type stuff. So Vlad, and I also know it's very late over there in Cannes, France, so good to see you. Thanks for coming on with us. Robinhood co-founder and CEO Vlad Tenev.
Thanks for having me, guys.
Appreciate
Cheers.
it. Josh, back to you.
Thank you, Brian. Well, the crypto market's certainly ending the second quarter on a high note. Robinhood enjoying massive gains on the back of its product showcase in Cannes. Sylvia Jablonski with me to discuss the crypto action. Sylvia, maybe broadly, let's talk about tokenization first. As a theme, as a trend, Sylvia, are you excited about that as an investor?
I am. I'm excited to see where it goes, right? Because it's this idea that you're taking, real world assets and making them accessible through a token. And the good things about that are you cut out intermediaries. You have, real-time settlement. You can trade 24 hours a day. You can trade within fractional shares and things like this. So I think it makes investing accessible for just about everybody. And I think it makes it super efficient and interesting. But it'll be interesting to see if it actually picks up and people start to, trust the process of tokenization versus holding a share of something in an account.
You followed Robinhood for a while there, too. I mean, it was a great interview there with Brian and Vlad. The arc of that company is really interesting. The way that Vlad has is repositioning the company to become this one-stop global financial services powerhouse. What do you make of it?
Yeah, I mean, I think that he has a very smart strategy, right? He's looking at that $1 trillion of wealth that it's going to come down from baby boomers to Gen X to millennials and beyond, and that's his trader, right? He's capturing every single global, or trying to capture every single global retail trader that is interested in AI-driven trading, that is interested in cryptocurrency. 63% of his Q1 2025 revenues were actually from crypto, and now he's really embracing that with the build out of this tokenization space. So I think that, they're kind of right on the money. That next gen level of trading and the types of platforms that people want to trade on is what he's doing, and they keep evolving. I mean, the stock has outperformed crypto itself, the S&P 500 over the last couple of years. So you got to give him credit. Do
you see crypto evolving? I ask because does it go from, okay, it's an asset we're trading like Bitcoin to something else? Because Vlad's really talking about it as sort of this underlying technology.
Yeah, I think it's the next evolution is what we're all waiting to see pan out, right? That's the question that everybody kind of asks about crypto. Like, okay, besides Bitcoin and the price rising, what else is there? But now you're starting to see it in other digital assets. You're starting to see the pickup of blockchain technology, tokenization, and things like this. So the more that it becomes commercial and mainstream, I think that we'll kind of get the answer to that question. And at some point, I do think there has to be more institutional adoption, the same way that there has been with Bitcoin and the evolution of ETFs and things like this. So as this starts to expand and become more tangible, tradable, usable, that's, the sky's the limit with crypto.
We were talking off camera, Sylvia, on break about just sort of how important the retail investor is to this market, the kind of investor who's a Robinhood customer.
Yeah, and I think the world of trading has actually changed a lot, right? Back in the day, it was all about what is the institutional trader doing, where is the hedge fund money going? You hear a lot more about where's the retail flow going than you do where is the institutional flow going. So I think it's become as equally as an important of an elephant in the room. And asset managers, stock providers, companies, ETF providers, we're all very interested in what all three of those pillars have to say. So
well, let's talk about the broader markets just for a minute as we head into the close, because we are green all over the place. All my popular averages are green. I have the Dow up about 300 points. So I got the SPX, your broad gauge, of about 0.6%. We have the tech-heavy NASDAQ also up about 0.6%. Just checking quickly on the small caps. Russell 2000 up about 0.2%. So green everywhere. I was talking earlier, Sylvia, about how some bulls have come on the show. And if I was to just summarize their arguments, I think it would come down to, listen, earnings are hanging in there. And Trump seems to have backed off kind of the maximalist tariff position, right? And so they stay long and strong the market.
Yeah, I mean, if we look back, it wasn't long ago that most stocks were down 15 to 30% back in April. That's not so long ago. But what has happened since then is we've had a 12-day war. We've had this tariff conflict and things like this. But yeah, I think all of it is getting sorted out, and investor sentiment is increasing with that. So earnings have been good. Jobs are steady. We are not in a recession. $7 trillion of cash on the sidelines. GDP strong. Corporate earnings are good. And all of those issues are starting to feel like at least they're trending in the right direction towards a resolution. So if that happens, and then on top of that, you get tax relief, I think that the markets are poised to run on this. That being said, it's a high bar, right? When the bar is this high and valuations are kind of this good, any little kink in the chain could throw us off. So proceed with caution, but it's, there's momentum for buyers.
Do you get, as a longtime market watcher, when you see markets behaving like this, at what point do you get worried that, okay, maybe we're getting a little complacent here?
Yeah, I just don't think about it that way, right?
Yeah.
Just the same way that, actually, the last time I was sitting here with you, we were watching some of the major averages fall together 800
That's right.
points.
That was a big day.
That was the last big day, and here we are today on all-time highs.
Yeah.
So I don't pay attention to it. Be a dollar cost averager, long-term investor, keep the stocks in your portfolio, obviously whatever you don't need to live on, and then look for new opportunities. And that's why I'm so big on researching things like the quantum space or that next gen of energy that we're talking about with Oklo, crypto, and all of these things. There are always places to put your money. But in terms of like your steady and manageable portfolio, keep it in there and don't freak out, and also don't celebrate and run for the hills when things are turning in either direction.
Don't freak out.
Stay the course.
Don't freak out.
Don't freak out.
It's an important life. It's a life lesson, really. While we're wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action. Following the closing bell, stay tuned for Market Domination Overtime.